All right, we got a head scratcher here. We got to figure out what's going on at Domino's. Here's a company that's been one of the best performers around for the last 6 years, steadily working its way higher on the back of consistently excellent results. But occasionally, Domino's has run into some speed bumps. Today, it hit a big one after the company reported what was widely regarded as a disappointing quarter this morning, sending the stock plunging down $13 and change, or nearly 10%. The company earned 89 cents a share when Wall Street was looking for 98 cents, and its revenue also came in lighter than expected. Meanwhile, Domino's domestic same-store sales increased by 6.4%. That's down 810 basis points from last year. International same-store sales climbed 7.9%. This is a rough quarter, but Domino's has built a long history of creating value for shareholders, and it's got the best technology in the business. So I have to wonder whether we should chalk this up. Maybe it's a one-time thing. Let's find out. Let's talk to Patrick Doyle, with the president and CEO of Domino's Pizza. Learn more about the quarter and where its company is headed. Mr. Doyle, welcome back to Mad Money.
Thanks, Jim. Appreciate the invitation.
All right, now, Patrick, one of the things that I've learned, and I saw this at Apple just earlier this week, sometimes you can be the victim of your own success. Had you not had such unbelievable numbers last time, I think we'd be discussing how you've been able to maintain this level of growth. How much of this is just the compares are so tough?
Yeah, I think that certainly has a lot to do with it, Jim. I mean, if you look the last 2 quarters now, fourth quarter last year, first quarter of this year, we've actually had 20% plus 2-year comps. So we were rolling over a 14.5 from a year ago. But frankly, 6.5 this year is still terrific. I'll take that. Great momentum in the business overall. In our international business, did almost an 8 rolling, almost an 8 from the prior year. So honestly, I feel great about the momentum in the business.
All right, Patty, let's deal with some of the things that people say, okay? Because when a stock goes down big, you get these theories. Maybe they're conspiracy theories. One of my friend Brian Sozzi at The Street talked about how perhaps there is a pressure coming from Pizza Hut, a more resurgent Pizza Hut. How do you feel about that one? They had pretty good numbers.
Yeah, absolutely not. I mean, what I've always talked about is the fact that the big story in this category is the big players taking share from the smaller players. And, Pizza Hut had a little bit better quarter. They were rolling a negative comp from the prior year, but that really isn't it. At the end of the day, again, I'll take a 6+ comp any day.
But there is something going on. I've got to tell you. Buffalo Wild Wings didn't really deliver the number. DineEquity didn't deliver the number at IHOP and Applebee's. We're getting a little subdued, obviously, from Chipotle. Some of that is definitely the problem with illness, but some of it just seems to be there's like a kind of malaise about going out. Take in, go out. I'm not getting robust numbers this quarter from anybody. Did something happen this quarter that made it so people want to spend a little less money?
No, I don't think so. I think the category is still fine. Value in QSR, I think, is good. Certainly when you compare it to casual dining and some of the other options for our customers. So again, I go back to our numbers. I actually feel very good about the momentum in the business.
Now, you did talk about labor costs, and it kind of got bogged down in the call, but there was a lot about New York City. I mean, is New York City that centric to Domino's quarter?
Not that much in the grand scheme of things. I mean, we had a little bit in our corporate stores. We happen to have a lot of our corporate stores there. But remember, we're 97% franchised around the world. So at the end of the day, it's not going to have that big an impact. But we did feel it a little bit with the rate going up in New York. That'll kind of settle out as we move forward. But no, I mean, at the end of the day, is that big a deal? It's not.
Okay, so what happens now with your cash position that's building? I mean, let's say you think that the stock kind of got ahead of itself because what happened is that you couldn't possibly do as well as last year. Do you wait for the stock to come down? You just let it happen? You just say, listen, that's one, the stock's overreacting because you do have a lot of cash that's building. You did refinance. I'm curious to know what you're going to do with it.
Yeah, we certainly have more than we typically carry, and that's really a function of we did a refinancing in the fall. We added about $700 million to our balance sheet. We used $600 million of that for an ASR that kind of ran through our first quarter. And in the meantime, we've been accumulating cash. So it left us with, the better part of $200 million still at the end of the quarter. We're looking at that. We're going to decide what's going to generate the best return for our shareholders. You know us. We usually don't carry much cash at all. That was really more a function of this accelerated share repurchase that we were doing That took up most of the window when we could do the buying, and now we'll look at how we're going to put the last of the cash back to work.
No, I've always thought of you as being the king of delivery. I am now getting, I got 3 different delivery services that will bring anything to my house, okay? And they all seem respectable. You got the Postmates taking stuff here and there that's clearly working. Are you running into some competition from these new systems that you, with a touch of an iPhone, will bring food from places that you didn't think, so that Domino's is not necessarily top of mind for some when it comes to delivery?
Yeah, we're certainly going to keep our eye on that. We do it better than anybody. Our delivery system is more efficient than anybody else's delivery system today, but we're certainly going to keep watching those players. I think, honestly, a lot of them are struggling to make money at kind of the marginal basis for those delivery services, delivering things. I think, Uber and Lyft have done better moving people around, but, we'll see. It's certainly something we're going to keep our eye on. But we look at our combination of great food, consistent delivery, doing that efficiently, and the ability to give great value to our customers, and we think that's going to continue to be a great combination.
Okay, you've been consistent, and I got to be consistent in thinking where the holes might be, okay? Yep. We have seen McDonald's be very disruptive. Steve Eastbrook's come in; he's really done a lot of things. I think it's apples and oranges, hamburgers and pizza. But is McDonald's disrupting your industry too, the pizza industry?
Well, they certainly have taken a little bit more share, and I don't think we're feeling it. But McDonald's is a big player. McDonald's starts growing again. There's going to be a little bit of a share effect, but it's really going to be at the margin. At the end of the day, pizza category is so not consolidated that there is room for us to take share within the pizza category. Category is still growing, so it's our job to put up good, strong numbers. Again, I feel really good about the momentum in the business. There were some puts and takes from an earnings standpoint, but I feel good about the momentum, same-store comps, both domestically and internationally.
Okay, thank you so much, Patrick Doyle. Great to see you, sir. President and CEO of Domino's Pizza. Good to have you on. Thank you so much.
Thanks, Jim.
All right, stock ran up a lot, came down a little bit. What can I say? Some profit taking, but it seems like the story's still steady with me. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.